as a consequence, in particular, of U.S. government debt and deficits, that the gold price goes higher. I see the only way that we have of getting out from under our debt and our off-balance sheet obligations. I see the only political outcome as honoring the nominal value of those obligations, but inflating away the net present value. We did this, Jesse, before you were born, probably, in the 1970s. According to the Congressional Budget Office, the U.S. dollar lost 75% of its purchasing power between 1970 and 1980. Not coincidentally, the gold price went from $35 an ounce to $850 an ounce. So at the same time that I think the big gold companies are reasonably priced and some of the smaller ones are cheap, I think the denominator goes up, which is to say, I think the gold price goes up too.
Due to rising U.S. government debt and deficits, gold prices are likely to increase. The government's only realistic option to manage debt is to maintain its nominal value while inflating away its actual worth. Similar to what happened in the 1970s when the U.S. dollar lost 75% of its purchasing power. Gold surged from $35 to $850 per ounce during that period. With large gold companies moderately priced and some smaller ones undervalued, rising gold prices could further boost their value. Rick Rule, a famous financial analyst, explains that tariffs are essentially taxes, and all taxes are harmful, despite Trump's claims otherwise. A sound foreign policy should foster friendships and minimize enemies. Still, Trump's approach, influenced by his art of the deal mindset, treats negotiations as a zero-sum game. His strategy is to pressure opponents into submission, which is neither an effective nor sustainable way to conduct economic or foreign policy. Politicians, whether Trump or Trudeau, should be tolerated rather than admired. Rick Rule highlights Trump's recent tariff threats as a negotiation tactic, as he and his advisors are fully aware of North America's interconnected economy. U.S. auto plants, for instance, depend on Canadian and Mexican parts. However, Canada is not innocent either, as seen in its excessive subsidies and protectionism, such as in the Quebec dairy industry. While both leaders have flaws, Trump's aggressive style makes him more objectionable in these economic disputes. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
Well, being an American, I want to talk about how they might impact Americans first.
Yeah.
Tariffs are taxes, despite Mr. Trump's protestations to the contrary. I believe taxes are bad, all taxes. And so I believe that tariffs are bad. I also believe in a foreign policy that encourages many friends and few enemies. So I get you. I think you understand my drift. Politicians, for me, be they Trump or Trudeau, are to be endured. That's all. This is sound and fury. About 25 years ago, I read a very disturbing book. It was called The Art of the Deal. The author was a guy named Trump, and he talked about the fact that a transaction didn't have two winners, it only had one winner. And the idea was to make your opponent's life so miserable that he or she caved it to you. And I think that's what he's about at present. I don't believe that that's a good way to conduct foreign policy or economic policy. I'm an old-fashioned American. I believe in the Bill of Rights. And I believe that the best government, whichever T, Trump or Trudeau, heads it, is the one that is the furthest from me and leaves me alone the most. Obviously, this was a negotiating ploy. I know that either Mr. Trump or his advisors understand the interconnected nature of the North American economy, the fact that U.S. Auto fabrication plants rely on parts inputs from Canada and Mexico. This is no huge mystery. And everybody knows that Canada isn't blameless either. The shameless subsidies and the shameless protection for the Quebec dairy industry, as an example, comes to mind. It's just that Trump happens to be a more objectionable tyrant than Trudeau. I hope that makes my point of view clear.
Rick Rule discusses that gold prices will likely increase due to rising U.S. government debt and deficits. Historically, one way to manage excessive debt has been to honor its nominal value while inflating away its actual worth. A similar situation occurred in the 1970s when the U.S. dollar lost 75% of its purchasing power, leading gold prices to surge from $35 to $850 per ounce. Given this outlook, large gold companies appear fairly valued, while some smaller ones remain undervalued. As inflation erodes the dollar's value, the price of gold is expected to rise, further benefiting both significant and minor gold producers. Now, let's jump into the interview.
Interesting question. I think we should have an honest audit of Fort Knox. That gold belongs to Americans. There are serious reservations about whether or not it's there, and if it's there, whether or not it's hypothecated, whether or not it's owed. Uh, at Sprott, we had a lot of gold audits. The technology exists to do that. It's not really complicated. 1 bar, 2 bar, 3 bar, sample the odd bar. It's not expensive either. And I think we need to call the question. The more the question isn't called, the greater the destruction in confidence around the political economy in the U.S. And frankly, while that crisis of confidence might not all be a bad thing, I think that the government owes it to the American people to say this gold has been there for the last 50 years, but since there's a popular demand for an audit, we should audit it. Now, the Defense Department has failed their audits. There's been a lot of failed government audits. This one's a little simpler. You count bars and assay them. As I say, Sprott has been doing this for what, 15 years? We'd be happy, I suspect. I shouldn't say we because I no longer work there anymore, but I suspect Whitney George would be happy to provide the technology for an audit for free to the US government. Now, revaluing the gold. I think that's a good idea, but it serves no purpose. If you revalue the gold, it makes the balance sheet look better, but in actuality, it isn't. There's $36 trillion in on-balance sheet liabilities, about $30 trillion net. If you revalue the gold, does the debt go away? No. Does it help you access more debt? No. Because who can foreclose? The U.S. government owes me, let's say, if I buy some treasuries, the equivalent of 1,000 ounces of gold. So I'm going to pull up an armored truck to Fort Knox and demand payment when the counterparty has an army and nuclear weapons if I get nasty? I don't reckon. It's all theater. The issue isn't the value of the gold. The issue is the fact that we have $36 trillion in on-balance sheet liabilities and $100 trillion in the net present value of off-balance sheet liabilities. Little inconsequential things like Medicare, Medicaid, Social Security, military pensions, government pensions. When people quote the national debt, they quote that $36 trillion number, which is the small one. And revaluing the gold doesn't change any of that because no creditor and no pensioner has access to it.
As inflation continues to weaken the US dollar and debt levels rise, gold remains a strong hedge against economic instability. Investors may find opportunities in large, fairly valued gold companies and smaller, undervalued ones, as the long-term outlook for gold remains bullish. With historical patterns suggesting further appreciation, gold could be crucial in preserving wealth amid financial uncertainty. How might rising gold prices impact global investment strategies in the coming years? What role do central banks play in influencing gold prices through monetary policy? Share your thoughts in the comments below. We'd love to hear from you. If you found this helpful video, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.